If you got a hater in your life, just dust your shoulder off right now and make.
Okay, amazing day. Let's get started. Get rolling. Hopefully you can hear me. Let me see.
Grand Rising.
Oh, Grand Rising. Amazing day, sister. Amazing day. Last day of the week. Let's go. Let's stay going hard, guys. GBP USD. I'm looking for the sell. All right. Let's get into it. I am looking for the selly swelly. All right. And we are looking at it right now. So if you're able to get in front of your charts and you're able to take any trades, we're going to look and see why we're interested in this trade. Okay. For a few reasons. We're in a premium. I'm going to draw some lines, some additional lines. I was trying to look at this whilst I was in the gym, which is what I actually said I'm going to stop doing. So I'm going to stop, there you go. I'm going against something I said I was going to stop doing. I was actually looking at this in the gym. See, in the gym, I'm supposed to be gymming, you see? So trying to be present, and I was kind of because I was looking at this, all right? So let's have a look at it. I'm going to look at it quickly. Let's try and clean it up a little bit. I'm going to clean it up. But I'm letting you know that I'm very interested. So if you hear any noises going on in the background, that would be me getting into the trade. Okay. I want to be in GBP USD for the sell. I am bearish on this market, but it has been doing a little hokey cokey. All right. But we've just come up here, made a retracement back and tapped into an imbalance over here that I identified, which is this yellow box, even though I didn't mark it as imbalance. Okay. And I'm interested in getting early right at the top of the premium and managing my risk. So as we can see here on a smaller time frame, and yes, I am on a 1 minute, guys, so sorry. All right, but we can see here now, it's a bit difficult to see structure, but I personally can see structure here. Here, there's some minor structure in here. We've got structure in here. We've got structure here. We've broken below the structure indication here. All right, got a nice indication. Possibly getting a correction now into some of this area into here, maybe, or maybe not. Maybe we're ready to go right now. We don't want to correct any further than that. I'm waiting. We've got 34 seconds for this candle to close, and I definitely will be waiting for it to close. All the way above this high is only 6 pips. I'm going to be placing my stop all the way above that high. I am. And I know what that is in my lot size. But if you don't, you're going to be going to Cashback Forex. Yeah, you're going to be looking at your GBP USD. If you've ever forgotten how to use this, I've used it in front of you so many times. You can see what I'm doing. I type in GBP USD. It's actually one of my favorites in here. You see, I changed this from pips to, from price to pips. And I make sure I've got my account size. I make sure I know how much I'm ready to risk. I make sure I've measured out, the zone of how big it is. Okay. So I said 6 pips. I'm just going to say 10. 10 keeps me safe. Yeah, 10 keeps me safe. And I'm going to get into the trade. There you go. All right. I'm going to go get into the trade because on a smaller time frame, which I was looking at that on the actual 1 minute time frame, I was happy to see a smaller indication, correction, continuation. Now we are very small, all right, which means that I've given myself leeway. So my stop, it's not uber aggressive. My stops are way up here somewhere. Okay, maybe further. Okay, now it's a small entry on the basis that I want to see this market not only get down to the bottom here. If we get down to the bottom of this white line, I will be making my position risk free, just in case this market wants to tap here and push back up into these levels. But ultimately, what I'm looking for is this market to break these lows. Okay, that's what I'm looking for. Now, I may be wrong. It may not do what I say I'm going to do, and that's fine. All right, there's nothing wrong with that. I know why I've decided to get in here. Let's zoom out now and work our way backwards. Okay, let's go and work our way a bit backwards. Okay, so if I go to my, go all the way out, let's go to a much bigger picture. Let me hit reset, guys. Another way you can reset your chart is this little button over here. All right, reset. Okay. And we can see here on this is the 12-month chart, like so, okay? 12-month chart, the market's looking like that, all right? So we can only see a handful of candles because every single one of those candles is an entire year, okay? So we can kind of see this energy. And I'm not going to put any more lines in, so I don't want to mess up the screen, okay? If I drop down to our weekly chart, okay, and try and shrink everything up, okay, we'll be able to see how this market has been respecting that top end of the range. Okay, it's been respecting it, been respecting it. We're back up in it over here. Okay, so I'm expecting this market to make lower lows, lower highs, lower lows, lower highs, lower lows, lower highs, lower lows, lower highs, forever and ever to the end of time. Yeah, till he cometh again. Yeah, until he this decides to do something else, till it decides to push in a different direction. Let's have a quick look. Let's see if there's any thing that's going to throw a spanner in the works this morning. All right, let's have a look. Friday, May the 17th, guys. Time is flies in, yeah? Flies in with a Z. It's moving. Can't see too much USD news. Can't see too much GBP news. There is some orange folder GBP news, etc. We might have a clear. We got Fed Wallace speech later on. Red orange folder news. All right. I don't know what else is going on off schedule. Okay, in regards to what country's on fire at the moment. I'm not sure. Okay, but I'm looking at this market, and if I drop down to my daily time frame now, we can see how this market, pushed up into this level, boom, 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 boom. As we've said, broke structure, indicated, corrected, went sideways whilst it's thinking about its correction. Okay, in here, captured liquidity. Have a look, we're in here. Captured the liquidity above here, this little bit here. Nam, nam, nam. Let me put some, let's tell the story. Let's write the story over here, okay? No problem. So this was, I'm going to put in here, captured liquidity. I'm going to put in here, I'm going to put in here, indication. All right, without an O. I'm going to put an indication in here. I'm going to put some other little lines. I thought I saved some little let me see if I saved it. I thought I did. If I do this, I thought I saved some templates for these lines. Did I? Yeah, I did. There you go. Broke some structure in here, indication, and then we've got over here. This is all correction. All right. Move these out of the way. And then we've got this here, which in my opinion, this whole energy should be continuation. Continuation. Yeah, put a man spelling out there for the whole world. There you go. All right. So, at the moment, we saw the market indicate outside of this sideways action, made a correction all the way back up 50% into that range. Let's zoom in some more. I want to drop down to my 4-hour time frame. You can see I've even got a Fibonacci here showing how the market's pushed back into the 618 area. Let me see if I've drawn that correctly. I got a feeling I drew that in the gym. Pushed all the way back up into the 618, which we call the golden zone between the 618 and the 786. That's why it's orange. The 50% was here, and it did have a lovely reaction to the 50%, boom. But this was early hours, and it thought to itself, nah, it wants to come back up in here. It's pushed up in here. Now, is it done? I don't know. It might come back down here. Decide it wants to push all the way up into here, where we can actually see there is some imbalance to the left-hand side. All right, so that little position that I've just taken, it's not a foregone conclusion, yeah? But I'm just hoping it pushes down first before deciding maybe it wants to come up into, have a look. I don't want it to come anywhere past 50%, but what I want to show you about that 50% is that liquidity grab is going to make me make that zone a bit bigger. There is this here, which is my concern. All right, it's my concern. And now we can see here the market. I drew a range. How did I draw this range? I touched this data point, and then I pulled out a parallel line. Yeah. And that parallel line, we saw the market push up into it. So it's in that premium. It's 50%, of this range, even though it grabbed some liquidity, but now the range is bigger. The sideways action that it was doing. It's just about below, in the 50% area of it. Like I said, I'm a bit concerned about this over here. I'm not going to lie to you. And for that reason, we're in a premium of this yellow dashed range. I'm going to get rid of this Fibonacci. It's unnecessary. All right. I'm going to get rid of it a bit. Okay. And what was I saying? I was saying something. And we've seen a reaction up here. Now on the smaller time frame, down to my hour. Okay, but it's a bit hard, difficult to see the structure of this impulse that flew up in here. Okay, it's a bit difficult to see. There's one. If we drop our time frame down to our 15 minutes, we can see how when this market kind of accelerated away from there, like so. Why am I drawing it like so? Because I'm trying to touch this last low before this highest point. And from here, this market decided to start breaking structure and trading down and created this range because it made this data point here. Have a look. This data point and this data point up above here. All right. And the market's been trading down within this range. So back up against that premium of that little range at the moment. And I'm hoping to see the market at least get down to this red line. Yeah, that's what I'd like to see. If I drop my time frame down to my 5-minute time frame, let's zoom in. Or can I hit the reset? There's a reset, do some good stuff. There you go. On the 5-minute time frame, we've seen the market push down here. All right. And then the market's made a correction again back up into this level. Yeah. Because if you understand what time was this market doing this, it was doing this in Asian session, sleeping. If you don't know when the sessions are, you use our calendar tool here called Kill Zones. All of this is some Asian session energy. Okay. And then from up here, we've seen the market tap up into that premium. And on a smaller time frame, we've seen this market, not on a 5-minute as such, but on a smaller time frame that I was looking at, we saw this market on the 1 minute. So as I was looking at it, we saw the market indicate below some minor structure, which is risk windy because we're on a 1 minute. Correct, continue. I just want to see this market continue going, but I've taken this trade very risk off with my stop really in a place whereby it's well above this high, taking into consideration my spread. If the market comes and breaks up above here without getting down to where I think it should get to, well, then we'll reassess. Okay, but at the moment it's just doing a hokey cokey. Now, what's my concerns? I can see a little bit of imbalance on the 5-minute time frame in here. It's a little bit of imbalance in here. That's a concern. Could the market go up and tap into that? Let's go into look at a 10-minute. That whole area is in balance. Look into a 15-minute. It's here at the moment. But at the moment, we are pushing down as I believed it would do. Okay. I'm in a little bit of profits there. And like I said, when we get down to the bottom of this range, what I'm actually going to do is I'm actually going to make it risk-free. Okay. And I'll tell you why. Because I don't know yet. Because I really want it to break this level. What I don't want it to do is just tap into this level here down here. Boom. And start pushing up, straight back up into here. Because if that's the case, well, if that's the case, I'll be close to getting stopped out. All right, I'll be close to getting stopped out because my stop is high. It's higher. It's about up over here. All right, but I'm concerned where it is, what my risk is, and obviously my spread. So my spread meaning that the line might be here, but my spread might be close to my stop. All right. So I'm just trying to see when I start seeing this market of this down here. Look at this push down. When I start seeing this, if I see this indicate, correct, and continue against me on a small, I don't care what time frame it's, 30 seconds, I'm going to make sure that I'm well insulated from this energy. But I really want it to push down through here. So I'm going to pop a little alert, and I want that alert to just start ringing off halfway through the session, telling me that it's pushed down through there. All right. And when it does that, I'm going to start wishing to myself that I was in there. I was in bigger. What's that go? All right. Because when it breaks here, it'll be breaking a 5-minute structure. And then I'll be expecting to see a nice correction. Okay. And then hopefully a nice continuation after breaking that structure. All right. If not, and it goes and does something else, it is what it is. It is what it is. All right. There's nothing more we can do apart from, when we place our trades and we've got a reason for placing our trades, then we let the market do what it can do, what it should do. Because it's, like I said, it's got nothing to do with us, what the market does, whether or not it's going to, it's just we have to make sure that we're placing our trade with our edge and we're sticking to our rules. It's that simple. Okay. All right. So I may just pop some alerts in here and then I'm going to leave this alone. Like I don't want to just sit around and talk about it all day. In fact, I want to take it's Fix It Fridays. Anybody got page to look at, I'm going to break it down from the top. Is there something else that's looking good that I'm missing? Let me know. Let me know. Anyone else want to go to another pair? What pair do you want to look at? Let's go, let's go, let's go. Give me some energy. Some energy. Give me some energy.
Can we look at a crypto pair?
Please. I want to look at crypto. Let's go. What, BTC or you going ETH or we getting? We at something else?
BTC, please.
Let's look at Bitcoin, all right? BTC USD. Let's break it down from a unity perspective. Let's break it down with a strategy. Let's understand market structure and price action. So the first thing, what we're going to do first? Let's go. What we're going to do first? What's the very first thing we're going to do? Let's go, let's go, let's go.
All the way out.
Go all the way out. We want to zoom all the way out. Yes. All right. We want to zoom all the way out. Have I got something on here? I'm going to delete everything off this chart. I don't want one we made earlier. Let me do this. Let me get rid of that. We are going to zoom all the way out to know Hua Guan. All right. To know where we are, to know what's happening, to know what's been going on. All right. So as you can see here, from this perspective now, I can start saying something. I can say, look, have a look. I can connect some dots, all right? Generally connecting some dots. Now, what is the point of this? The point of this is being able to identify the general energy of this market. Like now, if somebody asks me what's been going on in BTC USD, I can confidently, with my chest, say that BTC USD has been a bullish market, making higher highs and higher lows. All right. Now I've just cheated and I've done a few lines quickly also off of the back of that, but I can say BTC has been making higher highs and higher lows since 2015, yeah, or thereabouts. That is not my opinion. That is a fact. Okay. Because look, higher highs, higher lows, higher highs, higher lows. Man are expecting, that's why people are bullish on cryptos. They're expecting higher highs. They're expecting this thing to go push up into these stratospheres over here. Okay. Okay. So when we drop down to our daily time frame now, I can get a little bit more detailed. Let me hit that reset button again. I don't normally use it, but looks like it's saving man some time. There you go. All right. So we can see here how this market, we can draw in more lines. Once again, what are these lines for? They're a guide. They're to show you the trend. Markets move in trends, and there's many reasons why trends occur. All right. You can talk about herd mentality. I'm not the only person that can draw a line on their trading view. Yeah. So when you get millions of people drawing these lines on their trading view, you get some herd behavior of people saying, okay, at this point in time is a good place to buy. And when lots of buy-in comes into the market, all right, it pushes prices up, or vice versa. When lots of selling comes into the market, it pushes prices down. So have a look, I'm drawing some more lines. It's showing this retracement coming back into this potential area of demand on this bottom of this line. The only concern I have is, can you remember this line that I put in here? This line that I put in here was a smaller range. I'm going to make it a bit brighter because you can't see it. In fact, I'm going to make it turquoise and brighter. The concern is this the top of a smaller, tighter range that Bitcoin's been trading within? Okay, something like this. Obviously, as I zoom in, guys, you're going to see my lines get worse and worse because when you're all the way out on the weekly, it looks really accurate. When you zoom in, you realize you're nowhere close to the angles, all right? So we're looking here and we're thinking to yourself, okay, this was up in a premium, potentially up on this blue line. That blue line is a smaller range. It's either two scenarios. Either Bitcoin's ready to rock and roll and we're trying to push up to this larger range over here, all right? Or are we trading very tight within this white line, hard white line, and this little blue range that I've put in here? Well, to be honest, I'm going to change this range. I don't like it here. I'm going to put it here. I'll tell you why. Putting it over here is putting it in a place before the bullish actions have even started. So these angles are off, yeah, but let me put them on, all right? It's not me keep saying that they're off. Let me just put them on, all right? So how would I draw this line? I'm going to touch from here, first data point sitting in here, okay? And I'm not going to pull this line too far because the market's, in fact, I will. I'll put it all the way to here. Then the market, if I was to put the top end, this would be the top end, touching this data point. So all the way to over here, this market was staying within the program. And then it accelerated, broke outside of this range. This is a bullish sign. Look, bullish sign. If anybody knows about other things, maybe this looks like a bullish flag pattern, whatever it may be. Pushed up in here, boom, broke outside of this blue range, made a retracement. Now the question is, boom, are we looking to explode in this direction? Very possibly. Let's drop down to our 4 hour. All right, on our 4-hour time frame, have a look, guys. Our GBP USD is still going well as well. Did anybody jump in that trade with me? I don't know if anybody did. If they did, you should be in profits. All right, you should be doing in profits. All right. And I'm just watching to see. Let me have a quick glimpse over here, guys. Let me just so I can do what I said I was going to do. I didn't put an alert in. But it hasn't quite broken that level yet. Let's have a quick look. So we got in over here somewhere, and the market's now down here. Now we're at the bottom of that range, and I said, if I start seeing an indication, correction, and continuation above some structural levels, which is kind of here, to be fair, all right? Unfortunately, it's a bit far away. I don't really want it to be that far, okay? If I start seeing the market coming up into these levels here, I'm going to just protect my position so that I make zero money, all right? If it stops me out, because I'm concerned that the market is still within this range. You see these two dashed lines, and it wants to push up further into the imbalance that's up in here. I'm concerned, but if it breaks this structure here, well, yippee-ki-yay, I'm ready for this to rock and roll, and I'm ready to actually scale into my position. Yeah, to get a bigger position because I'm bearish on this pair. All right, so I've got an alert in here, and I'm also going to pop an alert. There should be alerting down here on this line anyway. I'm going to pop a little extra one in there just in case. Double alerts, yeah? Can't go wrong with double alerts. Make sure that this isn't unmuted. It isn't unmuted, all right? I'm good. Let's go on my BTC USD. So this market is trading down within this range. And let's have a look at a 4-hour time frame. On a 4-hour time frame, I have to draw some lines. Again, in here, have a look at my lines. From up here, this would be my line. Somebody tell me why this is my line. Who I've said it, let me make it a different color. Can somebody tell me why that's my line? Because I always get questions about how do you draw the trend lines in though? Just draw them anyway. Someone tell me why I've drawn this orange line like that.
To represent the last high before the lowest low.
That's right. And touching in from that other structure. Look, if I used to draw a structure in here, have a look. This would be the high, right? This would be the low. This would be the high. This would be the low. Yeah, this would be the high, this would be the low. All right, so if you can see my orange line, I'm going to get rid of this line now. My orange line is touching those data points, but more importantly, this last high. That's rubbish. That's terrible, that one. Let's go over here. This last high before this lowest point. This is the lowest point before the market started to push up. That is not an opinion, it's a fact. If I was to put in a range, this is the range. Yeah, that's the range, all these little green dots, showing what's happening. So on a 4-hour time frame, when the market got down there, the market was trading within that range, that green dot and that lowest point. We see the market wick up above here on a 4-hour time frame, make a higher low, make a higher high. At this point here, if I was to put a vertical line in, life changed for this market because it was coming down here from this high down to this low. Life changed. It started to push up. Now on a smaller time frame, if I go to my hour, have a look. From an hour time frame, we can start seeing closures above here, indications, but then the market made that retracement back into here, which more than likely looks like a 50% retracement. Look, have a look from this impulse all the way up to here. Look where that green line is. Can you see it here? 50% retracement. The market came and danced here. If I was here at that 50% retracement, oh yeah, GBP USD is doing a damn thing. All right, I'm in 4 figures right now from a small position. I wish I was in a bigger position. Let's have a look at it. All right, come on. I told you we do this every morning. Yeah, so you can have a look. We down here. Our entry was up in here. Now what I want to happen now is I want to see a closure below this low. A clean, like when I say closure, I mean I really like, not one that's close, so I'm taking out my ruler trying to see a millimeter below this low. I want to kind of see a nice closure. And we kind of got that by this big candle. By this next candle, we got 30 seconds. Now after I see that closure below this structure, what am I expecting? If this closure below this structure is going to be the indication of what it actually wants to do, because now it's broken outside of the range. Look at the range that I've drawn over here. This white range, it's not only broken outside of it just on some drawing tip, it's also broken at the moment, like I said, which I'm kind of waiting for now. We've got 7 seconds. Look, I don't like that. Come on, do something. I'm taking it. I'm banking it. All right. That's it. That's the closure. Oh, it's a closure. All right. Over here. So after this is going to be the indication. What am I expecting? What am I now expecting?
The retracement.
Correction. That's right. Or the retracement. Same thing. Same language. Well done. All right. Now that correction, like I'm in 4 figures. I'm expecting to go back to 3 figures. Of it maybe coming back into this area here. Maybe. Okay. Seeing that imbalance and going, you know what, Jay, I want to close that imbalance. Maybe have a look. Let me get out of fight 1 minute, go to 5-minute time frame. Maybe it wants to come in and tap into some other imbalances. Have a look. This is a 1-minute imbalance. I'm going to actually mark it in here. But above, we can see lots of other imbalances on other time frames. Now, we don't know what time frame this market wants to come and collect its monies from. Yeah, it might say, you know what, Jay, I'm going to go all the way back up and watch it. If I times that by, oh, that's right. If I go to a 5-minute, say a 15-minute, it's going to be imbalance. So here I can't really see that much 5-minute imbalance, apart from maybe there's a little something going on up here, which I've marked already. Have a look. I've already marked it, which is good. All right. But have a look. If I go to 15-minute, now we've got a big imbalance in between her, around the 15-minute time frame. Over here. What is that? What have I got on that's making all these colors on my screen? I've got something on. Kill zones. What's up? There's something going on. There you go. Yeah, I've got this 15-minute imbalance. The market might decide to come and push up all the way into here. Might do. All right. If this candle closes in the next 2 minutes and 16 seconds, it's going well. Yeah. All right. If it closes down here, it might decide to come and close the imbalance between the wick of this candle and wherever it closes. So I'm expecting it to go backwards. It'd be nice if it didn't. It just went to hell. All right. But I'm expecting it to go backwards. It's not going to scare me. Okay. So right now, have a listen. Because we broke below that structure, and I know there may be a retracement that may happen. I've made it risk-free because I'm in such profits. I never want to mug myself when I'm in proper profits and then I go back and I lose money. Like where I've moved my stop here is on a 15-minute time frame. I'll tell you what my stop is. My stop's about here. I think. Yeah, my stop's about here. All right. Now, it's not the best place for my stop. I'm not going to lie to you because there's an imbalance just above it. So really, I could just leave my stop where it is. I could. But first trade of the day, guys, I like to make it profitable. Like, just for my own ego. Like, I don't want to take an L. It's not even the first trade of the day. It's the second trade. So I took a small loss this morning in the gym. I was trying to trade in the gym. And I thought I caught this turn earlier and it kicked back against me. So my ego's already bruised. So I'm playing catch up already for the day. So therefore here, I'm completely risk-free. Now, if we get into enough profits, I do not care about giving it space for the retracement. I'm going to take the money, watch the retracement, and then get back in again. Listen to what I just said. I'm going to say this today again. When we're playing this game, we have prop challenges. We've got prop firm challenges, guys. And I'm currently going for 400k under management. I have 2. I'm going for another 2. I have a 200k account. Okay. That yesterday, I was actually, very close to doing what I needed to do on it. Well, I started getting a bit carried away. All right. But I'm saying that I don't want to just do an ego and be like, yeah, I'm going to stay in this trade, even though I'm nearly $2,000 up, that I'm going to watch this go all the way back up in here, take me into negatives on the basis that I trust that it's going to turn around in this 15-minute zone and start going down. Well, maybe. Yeah, maybe it might. But what happens if it just decides to do some other nonsense and push past here and stop me out for a loss? I don't feel like a bit of a mug that I was. So for me, because this account is a bigger account, if I'm going to wait till it gets to at least 1% before I take that attitude. It's not enough for me right now because it didn't quite get to 1%. It's starting to do the moonwalk a little bit with this green candle. All right. Before I take that attitude, rather it's like, listen, I'm taking the $2,000. Yeah. This is about risk management, but more importantly, it's about what is your plan? What are you trying to do? If this was your own private account and you're just up £2,000 now, and you've got to go on holiday tomorrow, or you got to pay for something or whatever, maybe, well, take the 2 grand. But who are you trying to impress? Yeah, because if it kicks back on you, stops you out for 0, you feel like I'm telling you, this is my, you know, it stings. Yeah. When you go and get stopped out, even if you get stopped out for 0, yes, you've managed your risk, you haven't gone backwards. That the only time you're happy about that is when you're up in your account. Not happy, but you don't feel away. You're up in your account. You got a 100K account, you're already up 5K, then you take a trade, and then it stops you out, and you stops you out for 0, and you was up a grand, or £800 or dollars, or 50, or whatever it may be. When you get stopped out, you're kind of like, yeah, you're a bit annoyed, but it doesn't really matter. If you're down in your account, you're 0.5% down, or you're 1% down, or whatever it may be, and then you was up at one point, a couple grand, and then that goes and stops you out for 0, you're like, oh my days, why don't I take the money? I'm telling you, remember I said it. You'd be like, oh my gosh, I was up 1%, why didn't I take the money? So you've got to kind of work out what your tolerances are, and more importantly, have the bigger picture of what it is you're trying to do. Like, what did I say? Have a look. We've seen it break that structure and close down below. I'm expecting to see a retracement. This is part of my plan. It's part of my understanding. We close below this structure. I'm expecting to see a retracement. Where that retracement goes, I don't know. If somebody knows in advance, let me know. If you know exactly where that retracement's going to go, please just WhatsApp me, yo. We can be best of friends. I don't know where it's going to go. Is it going to close this 5-minute imbalance and decide to start coming down and going to hell? Hope so. Is it going to decide to be extremely stubborn, start pushing all the way back up into these levels up in here? I hope not, but it could do. If that occurs, this is going to stop me out for nothing, because I'm not moving my stuff. I could say, yeah, I'm going to move it and take it into consideration, but I don't want to take a loss of, in here when the market really should be going down. Like, why are you back up in here? Yes, to close this imbalance, but maybe not. Maybe just being stubborn. Maybe you can do something else. So for me, I am about capital preservation first, and it is what it is. Yes, I might turn around and later they're like, oh, why didn't I take this 1,500 over here? You know what I mean? Yeah, and it might be, in hindsight, it's a beautiful thing. But I stand behind my strategy. I stand behind trading. I manage my risks. I leave the rest to God. Okay? I'm going to pop some alerts in here so that it just rings off when we're not looking at it. I'm going to place this alert in here. Things are going well. I'm going to place an alert just up here if things are going nuts. Yeah, doing something else. I want to be able to... Oh, it's going well already. It's going well before I even place the other trade. Place the other alert. Oh, just keep going. Just go to hell. All right, let's look at it on a 1-minute time frame. Indicated down here, made a retracement up into this level here. Looks like we're going to get a 1-minute close in the next 11 seconds. Now, for me right now, here's my problem. I'm not going to make it a problem. I'm going to scale in because I'm an extremely aggressive trader. Sorry, I am. All right, so there you go. I'm going to scale in, but I'm going to scale in so that even if it takes a loss and I'm wrong, I'm just trying to do the maths in my head. 5 pips, 25. Yeah, 1 second, guys. I'm just doing the maths in my head because I don't need to use this. I don't need to use my calculator because I understand what my lot sizes should be in my head, based upon the zones. Where are we? Based upon how big this is. This is 3 pips. For me, 3 pips always sounds like 5 pips. 5 pips always sounds like 10 pips. I'm always the best side of my risk, but I do want to scale in, and I don't mind taking that risk. And even if I take an L on it, the L isn't really an L because I'm up. Understand what I just said? I'm already up. So even if I take an L on an aggressive entry, trying to add to my position, it's not really an L because it's taken out of the money that I'm up by. All right. This is. So now let me show you how you make a mistake. The mistake is if I take this trade and I go in too big. So say let's do some maths now. And this is something you're gonna have to learn. All right. Let's imagine I'm 1,500 up here. All right, and £1,500 or dollars, or whatever, it should be dollars, but let's just say pounds. Come on, how can I grab this? What's going on there? All right, so I'm £1,500 up over here. And I go and add another position in here that can lose me 2 grand if the market comes and kicks back above this high here. Watch. All right, it's a bit of a problem. Because by the time I start going back here, when I take a loss of 2 grand, that other position is only going to be a grand up. It's like I'm now kind of minus 1,000. I don't really want to do that when I'm scaling it, especially at such a small time frame. This small time frame is risky, yo. Do you understand what I'm saying? It's a risky time frame. I want to get into a position whereby if I lose here, I'm only going to lose, say, for example, 500. And when this market comes back here, so it's no longer 1,500, it's 1,000, I'm still 500 up. So even if I flattened my positions at that point, I'm still up. Yeah, and that especially is the case when looking at, obviously, whilst I'm talking, it's going to start kicking back. I do see some imbalance. Hopefully, it's just closing that. But that essentially means that I'm kind of managing my risk. Now, I could get in really aggressively here and take an L and then still have the other position up in here, which is, you know, my stops further away from it up in here. But I don't want to take any L from this position. I just want this to be a happy, positive experience. Yeah, I don't want it to. So even if this kicks back here and decides to now come up in here in this imbalance that I was concerned about, I've got an option to either flatten my position here or in here, this area, and it still be positive. Yeah, or not take as much of a loss, if you know what I mean. All right. Yeah, I didn't really explain that fantastically, but you get my, hopefully you get my point. I don't want to scale into a position whereby if I've got that it's happened so much in the past, I get excited, get aggressive, I want to scale into a position. Before you know it, I start taking losses on the scaled in positions. And remember, when you lose, that is realized losses. When you've got a position that's in profits, it's just floating profits. You haven't banked it yet. So if I'm taking real losses based upon a position that is floating, so I'm 5 grand up in a floating position, but I'm taking real 2 grand losses, trying to scale in. So before you know it, I've taken 2 4 grand losses off a floating position that, you know, may only be 5 grand up in profits, or may have been 5 grand, but by the time I start taking those losses, it's gone backwards. Like, sometimes it's best that you don't even scale in and you just trade one position at a time when that happens. Because now you're taking losses, it's kind of working against you. Do you understand what I'm saying? Yeah, but we shall see, Wagwan. All right, let me move this stop down a bit. Like I said to you, I'm feeling a little aggressive. It's Friday. I got that Friday feeling. All right, and I'm gonna place an alert also down here. Come on, where are you? Where are you? Things playing silly buggers. How do I? Here you go. See, you gotta be fast. All right. Down here. All right, let's go back to our Bitcoin. All right, so our Bitcoin, we've seen indications as this market came back down here and tapped into this 50% level. Have a look at my lines that I will draw. So I'm going to get rid of this Fibonacci because you don't need to see that as a 50%. There you go. But I would just would have drawn some lines here. Look, and my lines would have looked something like this. Why would my lines look like that? Because I'm tapping into the last high before the lowest point. So therefore. Crossing down. Good things. All right, GU's crossing down. Now I got 2 positions in there. All right, but hopefully this keeps going. I'm not going to count my chickens yet. Yeah, hopefully this goes to hell. But now now's the dilemma. The dilemma is right now, I am at the percentage where I can just flatten it and be like, okay. Oh, let's go. Let's have a look. Look, GBP USD is like, you know that, gal. This always wants your attention. Look. Just keeps calling me. So we've gone down here, we've pushed over here. We've got 17 seconds for a close, but it doesn't want me to look at any other pairs. Every time I look away, alerts start ringing. Okay, we've got 10 seconds for a close. Let's see what happens. Remember, these markets can just spring back whenever they feel like it over 1 second. So we've got a nice close down here. I'm happy about that. I just want to see this keep going. Yeah, now it may not. But now look, we've got a close, now even below this structure. Great. So before we was looking at this structure, close below this structure, I'm expecting to see some sort of retracement. If it's nice to me and it wants to be my friend, it will retrace within this range and no further than that. Okay. If it hates me, it could do something else and I could still get stopped out. Now I could make that position that I've just taken risk-free right now. But it's right in the middle, like of this little imbalance here, that I'd prefer to see this market come up in here and then come back down first before I move it. It's just like remember, there's a spread. It's not just where the price is. This is TradingView is only showing you the price. On my MetaTrader, it's like this. The price is that line, yeah. but then the spread, say for example, this is like this. It's moving with the price. If I place my stop just up here, the price might not get up here, but the spread will. And the spread will go nam, 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 and stop me out. I don't want that to happen. Like, I am bearish on this. It's done what I thought it was going to do from up here. Yeah. And it's still going. So I'm backing myself. That's it. I'm backing myself. That's right. Right now, I'm at 3K. All right. I'm backing myself. Yeah. Now, what do I want this to do on a bigger picture? Let's have a look. Zoom out. Sorry, Bitcoin. I'm going to have to come back to you. On a bigger picture, I want this to get down to this pink line. Yeah. Worst case scenario, I want it to get down to this equal low. Now, let me tell you something. That gets down to that pink line. And if I can even take a few more positions, I may just pass this challenge. Or be close to it. Because it's a bigger target. Yeah. I've got to make nearly 20 grand. Okay. But we shall see. It's going okay at the moment. Now I'm expecting to see, especially when we get a close below this structure. What am I expecting, guys? What am I going to be expecting every single time? Whenever we break structure, what do I expect to see? Humor me. I know you know. Whenever we break structures, any type of structure, what do I expect to see?
A correction.
Correction. So that means whatever profits I'm in right now, woo, which are rocking and rolling, yeah? Make it, see, when it gets like this, it's making me think to myself, let me just flatten the position and take the money. It does. And I've got to manage that emotion because you see what they say? They say that, you see, when you're a novice trader, you hold on to your losers for time, like, oh, it's going to turn. It's going to turn, it's going to turn, it's going to turn. But then when you get your winners now, because you see the money, your natural, emotions, it's like, I just want to take the money, I want to take the money. So what you're doing is you're cutting your winners short and you're letting your losers run all the way to TP. Really what you should do, as soon as you see structure breaking against you, you should cut your losers short. Yeah, let me say something again, because you didn't even hear what I said. It went over somebody's head. Have a look. Woo! 4-0. It's playing with me. Because that's at my percentage now. I'm at a couple percent up now, yeah? All right. See what I'm going to do. Woo!
I was just about to say, yeah, so when do you lock in? Because
this is the battle that I'm having right now. All right, so let's go. I'm going to have this battle right now. So the battle I'm having right now is I am going to lock in 4 grand. Okay, so what does that mean? That means that even if this market comes and kicks back up against me, I'm going to be looking to get back in, but I don't want it to kick back up against me. Well, actually, I'm not locking in 4 grand because we are kicking back up against me. I'm going to show you exactly where I am, right? I've just placed I've locked in about 3.5 grand, all right? My stop right now.
They're not above us, we're above them. You see? Thank you guys so much. And of course,
just imagine it's this red line is about here. Taking into consideration this little imbalance over here, but it's not really taking into consideration the imbalance because of the spread. And at the moment, guys, the spread is actually quite considerable for whatever broker I'm with at the moment. It's like it's spreading. The spread is spreading, yeah, at the moment. But because I'm always in front of the charts, guys, I have no issues with if I got stopped out getting back in again. Do you get what I'm saying? Like, I don't have an issue with it because I understand how to get back in. However, where my stop is now, it's not in the best place. My stop should be outside of this white range. I'm not going to lie to you. This stop needs to be outside this white range because I'm expecting a retracement to come back in that range. Do you get what I'm saying? I'm expecting that there's a very high possibility this happens. Yeah, before it does that. And I think, no, I won't be safe if that happens. I won't be safe if that happens. So. Yeah, I won't be safe. Sorry, guys. I'm just looking at it and I'm just working out what I really want to do. I won't be safe if that happens. Okay, I will get stopped out. And if I get stopped out, then I'm going to have to get back in, which is not a problem. It's just more work. Okay. But I would be getting back in with 3.5 grand in my pocket. Now, it's not a huge percentage from my account, that 3.5 grand. It's just that for me, I have to have some sort of rules of banking my money. All right. And there you go. I've just been stopped out for the 3.5 grand. All right. And it was my spread that stopped me out. Now, let me show you. How am I going to get back in? And how may you try and join me and get back in? Now, the issue is this. Let me show you the issue. Now, this is the concern. So we have this range, this white range that we've just drawn. And I've just banked that money, which, like I said to you, it wasn't a huge percentage. And more than likely, this market's going to keep back up and keep running. So I want to be in this market now, but I don't want to be part of the retracements, especially when I'm trying to, beat a challenge, which is a game. It's not like, this is my investment account. I'm going to just buy this stock or whatever it may be. I'm going to go to work and come home. It's going to be in more profits. It's a game. The game is I'm just trying to pass the challenge. Yeah. All right. So I have seen this market trading down within this range. I'm seeing a little bit of a retracement now. Now, what I'm waiting for is either a closure below this low. Okay. And then I'm going to have to get in very tentatively, because this is an extended push down here, breaking structure. Here's the bigger structure here. Boom. It's an extended push. Yes, we've seen some smaller corrections and continuations, but let's imagine, have a look. If this turns around now, which I don't know if it is, but if it turns around now, from up here to down here would be the push. This market could decide it wants to come and retrace back in here 50%. Can push all the way back up into here before deciding to come back down. Then I would have to change this range, and it would be looking like this above wherever that market retraced to. So I don't want to just get in here all eager because I've made some money. I've got to be concerned. And look, maybe you can't see that concern now because I'm on the 1 minute time frame. Have a look at how it looks more concerning when I do this. 5 minute. Starts to look a bit concerning. Look at all them red candles. Red, 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 red. We're expecting a green. Let's go to my 15 minute candles. Now look how concerning it looks. Big reds. Big reds. We're causing imbalances. Big reds in here. 30 minutes. 45 minutes of selling. Yeah. Let me go to my, let me even go to my hour candle. How long is left of an hour? There's 41 minutes left of the hour though. So, this market could just keep pushing down. And like I said, I am interested in getting back in. Look how that market respected the top end of the range. Looks like it may decide it wants to keep going. May decide it may want to keep going. Now look here. The issue is on a smaller time. On a smaller time frame, I really want to get in up here on this premium. Okay, on this premium level, but I'm not going to be able to. I'm going to have to get in when I get a candle closer below here. So my stop has to be below, has to be above this level here for about, it's saying that's about 3.5 pips. 3.5 pips always sounds like 5 pips to me. All right. We haven't closed below this level yet, so I'm not getting excited by that. So 1 minute time frame is very small, and I need to see a clean closure. On a 5 minute time frame, this was a closure of this imbalance. It makes me think I wish I'd nudged my stop just ever so just slightly higher. Yeah, where it's supposed to be, but hindsight's a beautiful thing. The money is in my pocket. If I do get in now, I'm not going to be getting in to the point where if I lose, I'm going to be losing all the money I just made. Listen to what I just said. If I get in now, especially with the concern this market could kick back 50% of the level at any time, I am not going to be getting in here at the bottom of an extended push. Yeah. With and on the basis I'm going to lose all the money I just made. I think this market really could push all the way down to this blue line. All right. But prior to that, who knows what it wants to do? Who knows? Who knows what we want it to do? All right. So I'm watching this market right now. I'm seeing whether or not we're going to get closure below here. And I want to get in, but the devil on my shoulder wants me to get in. The angel's like, wait for correction in here. Now we're still up against it, like we're in this premium third-ish to the middle-ish off of this, this pink range. We are. But look, even if we take this as the structure here, we've indicated below it. Yeah, I'm gonna wait for definitely a really nice retracement first, maybe closing up some of this imbalance before I hit the button. I don't care if I know there's a 1 minute close below that level. We have got a little bit of a retracement that came in with a wick, but I don't want to just take L's for L's sake because I'm so eager. But I am bearish on this market, guys. I've told you that I'm bearish on it, and we've got it right from up into this level. We've broken some structure. We are waiting to see a correction, and I want to really get in at the point where that correction starts turning into a continuation to get in again, take another 3.5, 4 grand, 8 grand, whatever it's going to give to me out of the market. All right. To be fair, I am a bit upset at myself. I was a bit squeamish to take that money there. I should have waited for, see that right now, even if here, because this is a bit of structure here. Yeah, this is a bit of structure. I should have waited for this closure that's just happened, indication, this correction to come in here, that hasn't broken this level. And if I saw a closure back above here, then I should have closed out. But what happened is this. Let me explain to you what happens. My stop was here. This hasn't hit my stop yet. Yeah, the spread hit my stop because I'm so small at 1 minute. Yeah, the spread hit my stop. My stop is actually here, above this little bit of structure, and taking into consideration this imbalance. But when I was looking at the maths of how much it was, when I was moving it down and it was saying 1,500, moving it down, I was saying 2 grand. I thought a nice number sounded like 3.5 grand to bank because I was up about 4.2 when at its peak, maybe when I looked. Yeah, so I just placed my stop there, but I knew that my spread, when I was looking at spread and GBP USD spread with whichever broker I'm with at the moment, it's very variable. It's it's a variable spread, meaning it's doing this quite aggressively. So I know when it got anywhere near my stop, I got stopped. Okay, I don't care too much because I put the money away, but that's the concern. Whereas now, if I had placed my spread somewhere over here, my stop somewhere over here, which I could have done, placed it away from there, my concern was after breaking that structure, I see this happen very quickly. Yeah, maybe not that high, but I see a spike. So instead of me now, I only bank 3.5K. I'm looking at like, oh my gosh, I'm at 1,800 now. I was just at 4.2, now I'm at 1,800. I didn't want to do that. Like I said to you, trade of the morning, there's going to be many trades today, Friday. Doesn't look like there's too much economic news, madness to happen. I don't want to be in a situation whereby I'm just like, I remember I already took a small L this morning at the gym, my mistake or my bad. So yeah, I'm happy to correct that mistake. All right. Now look at it right now. We didn't break this structure. We actually stopped right on that structure there. Was that a coinky-dink? Was that a coincidence that we just stopped right here? I don't know. But at the moment, this market is trading within this little range here. Like within this high, this low, and actually making some consolidation at the moment, unless we see it breaking above here or doing something. And look, we're still within this range, within this energy that we drew here. All right. So at the moment, I'm still thinking to myself, yeah, we're within that bearish energy. When I see it start breaking some structure, and this isn't key structure here. This is very minor structure on a 1 minute time frame. So we're getting worse and worse and worse. All right. So because we're level here, this is the last high. So right now we're getting an indication above this last high. We haven't got a closure yet. We've got 16 seconds. All right. And now we've pushed all the way up to here. I mean, I would have definitely been stopped out now anyway. So that's outside of the imbalance plus my spread. So cool. I got stopped out at the right time. But let's have a look to see what it does next. We're getting a bit of we don't know yet. How long? What's the time? What is the time? What is the time? What is the time? Yeah, we just got a candle closure. Look, this here, yeah, it's a bit of fraff. That isn't a clean closure for me. See that here? Isn't a clean closure above this high. In fact, they actually they're on the same line. Those are the ones that suck you in. Pause. Yeah. Those are the ones you need to be careful of because you think to yourself, yeah, that's the closure. It's not the closure, bro. It is not the closure, bro. You want to see a clean closure? If this closes up here now, that's clean. It's a clean indication. I'm like, cool. I'm waiting for correction now. Where might that correction come? It might come down in a little bit of imbalance in here. Cool. But when you get them little close ones, and sometimes the close ones are the indication, but Owanda is just showing you the candles badly. But I'm saying to keep yourself safe, wait for clear closure. Sometimes you're going to look at this, and I'm saying it's in line. You look at the MT4, it is not in line. It is definitely a closure. All right. Which one do you pick? Which one do you choose? Well, that's the $1 million question. Yeah, I'd always say go with your broker and to go with this trading view iteration of what's going on. So on my broker, this was an indication. This closure here. This closure was very clean above this high over here. So from a structural perspective, this market has done this, and this is closed up above here from a structural perspective. So maybe there might be a little retracement in here, which we've kind of already got, or maybe it gets deeper in here because look, or maybe let's have a look on a larger time frame. On a 5 minute, let's move this out of the way. See what's going on. Not really nothing there. Let's go 3 minute. Let's go 2 minute. Now maybe there's a little bit of imbalance here on the 2 minute between here and here. And maybe the market makes a retracement quickly in here and starts pushing up. Who knows? Now, I could choose to trade this retracement if I wanted to. But trading a retracement is a lot more advanced and it's a lot more risk because you can't go to sleep on it. Because you're saying you're trading, you're going against what the general energy of what the market's doing. So you've got to know how to get in, but most importantly, know when you're supposed to be getting out, when it's getting back in track with the tide. You know, if the tide is going in this direction. For me personally, where would that be? That would be that 50% level of this impulse, which even though I've deleted the Fibonacci, is about back up into here, into this level. If this, and so then I got to ask myself the question, is it worth me trying to get into a trade from here to approximately here for 7-8 pips? It is not worth it. It's not worth it. So I might as well just wait. Even if it doesn't do that and starts pushing all the way up here and I'm going, oh, I should have got in. Shoulda, woulda, coulda, maybe. Yeah. There you go. Cool. So I've got my alert in here. I'm going to leave an alert in here, down here. That's going to ring when that market starts to come and do something pushing down. But more importantly, I want to be part of when that market, if this is the correction, which would be great, when it starts to decide to continue. So you see right about here, below that 50% level, because I want it to alert before it gets there. Ring off. I want it to ring off, give me another opportunity for me to get in up here. At the top of the continuation, when I see indication, correction, continuation on a small, I might not see it. It might be so small. And then ride it all the way down to this equal low. Ding, 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 ding. And then beyond to this low. Ding, 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 ding. Then breaking through that low. Waiting for another correction. All right, let's go back to Bitcoin. So, Bitcoin. This would have been the retracement. And then we've seen here the market come up here. The market was going sideways for some time. Have a look at the sideways energy in here. Between here and here, this is a sideways on the 1 hour time frame. Okay. And then Bitcoin decided, no, enough is enough. Broke outside. So this was the indication, this was the correction. Then the market started to make this continuation as it started to go sideways. Then it broke here. On a smaller time frame, there was an indication, correction, continuation. Do you want to see it? Let's have a look. Let's go to our 15-minute time frame. Let's have a look. If I was watching this, waiting for a closure above, and I really wanted to get into Bitcoin, you could have got in. It wasn't a great correction. All right. So let me just make sure. Let's have a look at the levels. Make sure I draw them well. Yeah, I think that's all right, box. That's okay. That's the range that we was trading within, about like this. We've seen the market have a clean closure above here, indication, pushed up to here, corrected back down into here, closed up here. Now, there was this concern of this imbalance, but the market didn't care about it. Now, if someone's looking at it and goes, Che, what are you talking about? I can't see it. Why is that an indication? Why is that a correction? Why is that a continuation? Well, let's look. Let's investigate. For a start, we could have been drawing in our angles. Okay. Let me shrink this up a bit. We could have been drawing in some angles. So let's just draw in some angles like so. I'm going to make it a different color. This horrible angle. We just do it from here. Of this market kind of pushing up, touching some data points. Remember, this is not like, you're not going to be out here with your binoculars, your looking glass and your millimeter ruler. It's not that. Yeah. The market was in here doing this little energy in here. We see some smaller energy, and then the market decided to get turbo. Said, yeah, I've had enough. I'm ready to go now. When we see quite tight candles, the market's nearly winding up to do something. The market started pushing up in this direction. Boom. Now I'm going to draw this line. This is obviously after the fact, okay? But look, after this big move here, look at it on a 5-minute time frame. You ready? So I'm looking at this area right here. On a 5-minute time frame, it's going to look a lot clearer in regards to an indication, a correction, and a continuation. Because look, boom, big indication up in here. This market is coming back down here, making some corrective energy here. We don't know if this is going to come all the way down here and close this imbalance, which I would have preferred to see it do. It didn't. It stopped here, then it closed back up in here. Now, your aggressive entry would have been here, with your stop below the last low. All right, you could put it over here, below this little wick over here if you wanted to. All right, if you wanted to be safe, it would have taken into consideration this imbalance, and it would have been here. All right, the safest place could have been below this low. Every single one of those entries makes you profitable. If you're an aggressive trader, you say, you know what, I'm here, is what it is. Willing to manage your risk and get back in again. If you're a bit more conservative, you place your stop low, but have a look. That's the indication, correction, continuation outside of a range of consolidation, which is that big red block. I would have gotten into that trade and I would have been in profits. All right. And how I would get out of that trade, because where everyone wants to know, how do you get out of the trade? I'm just looking at that GU. Looks like it might have turned around. Yeah. I'll get out when it does the exact same thing against me. So look how this market was going up here. Now if I draw these lines, it's a bit better if I drew the line like this, because this is structure over here. And then maybe you've got some in here and you've got some kind of minor. It's kind of a bit ugly. You're gonna have to go even smaller to see it. I can stay in this trade until the market does it against me, breaks against me. Now look, here is structure in here. Can you see on a 1-minute time frame is this? If I'm really happy with my profits, I'm just like, listen, if I see it break against 1-minute structure, I'm getting out. I'm looking for an excuse to take my money. I'm not looking for an excuse to possibly lose the money. If I'm in great profits, I'm up here giving 10 grand up, and I see this market break, indicate below 1-minute structure, make some sort of retracement correction, and then come and close down below here. Mate, I'll just take my money here. Look, I'm out. I've had enough. I'm not sitting in this no more. All right. And would I be right to have done that? Maybe. Here is some real structure. So maybe it would have been better if I made this my checkpoint. But if I was in great profits, the issue is you're just losing all of that. All of that energy there, you lose that. All right. So that's why when you're in good profits, you can make your criteria a bit tighter. You're just looking for an excuse to take your money. All right. Oh, let's go have a look at GU. Oh, I should have stayed in it. We're rolling again. All right. So we go 22 seconds. So I'm going to manage it. I'm getting there very small because I'm still concerned. Even if this closes here, I am still concerned when it kick back and come all the way back up in here. Ooh. He's trying to just draw me out. He's trying to draw me out. All right. I'm going to get in here very small. 2 seconds for the close. Ooh. I'm going to get in there very small. Just to say I'm involved. I haven't hit the button yet. This is the blue level in here of structure. It's like I don't want to get in, but I do want to get in. I don't want to not be part of it because I think we're going to break past this level and I think we're going to keep going down. All right, I do. But getting in the trade
to wait for an indication
past this level,
continuation again. Past that level.
I could do. Yeah, you're right. But you know what it is? The problem is here. Can anyone else tell me what a problem is I'm having right now? Does anyone say, by what I've just drawn, just right in there? What's the problem I'm having right in here? What's the concern I'm having? I just drew this box. That's the hint.
You're still at a premium.
I'm not going to say that, so I'm going to say no. Look at this pink range between these two pink lines, and I've just drawn a box. Where am I in that range?
What, is there still imbalance below it?
50%.
50%, but I'm in the middle of the range. So this is the concern I'm having about this kicking back 50% up in here is justified because in the middle of this range, this market could go this way or go this way. It could do anything. It's a lower probability trade from the middle of this pink range. That's where I currently am right now. Remember, the trade that I took that you guys watched, I took it here in a premium at the top of that pink range. I'm happy about that. Hence the reason of really why I should have just kind of bit the bullet and just stayed in the trade. really. I'm not cared about the 4 grand. Because I'm ultimately I want this to come down here. But the only issue is right now we have question mark. This question mark, which I'm trying to draw, which is terrible, but that's supposed to be a question mark. It's horrible. All right. Are we gonna first do a little zugu back up into here before we zugu back down into this level? Zugu and get down to this pink line. This is the added question that I add into my trading by taking a trade from the middle of a range. At the top of a range, I'm not thinking like that. I'm thinking about the top of the range, probably higher probabilities that we're going to come down from this pink line. And every time we touch that pink line, we've been coming down. Yeah, however way you draw it. Up here, we've been coming down. Up here, we've been coming down. Up here, we've been coming down. The question of it going up here isn't on my agenda. From the middle of a range? I don't know. Look, over here we got to the middle of the range, we kicked all the way back up in here. You know, like it's like you don't know. It's not part of our plan to take trades from the middle of a range. So that's my concern. But at the same time, right now, I could be talking wicked, and you just see this market do this now, bust through that level, make its little retracement, doesn't get anywhere near me. Like I could get in this trade right now, place my stop up here. I could do, but it's quite a big zone. It's not, actually, it's not quite a big zone, but it's a big zone for me. It's going to be 20, 25 pips zone. On the basis that we're going to get down here, because when we get down to this pink line, I'm expecting it to retrace and get back up to this pink level. So it's not a problem if I place my stop above here. So if you wanted to take this trade right now, you could hit the button now, you know, and this could be your trade. Have a look. Boom. Stop above this level here on the basis that you're getting down to this pink line. And ultimately, look at the bigger Russian doll. Let me zoom out hour. Trying to get down to this yellow line. So on a bigger picture, it might not happen today. Well, it won't happen today because you don't move that much. But you're trying to get down here to these equal lows over here. Now, that could take you all over next week. And it would be a 1 to 6 trade? Yeah, a trade. You can hit the button now. In fact, I might hit the button now, like that, on a smaller position. Yeah, I might do. Tell you what I'm going to do that. All right, I want to hit it on a smaller position so that I've got that running in the background. That's my savings account. All right, just running in the background. I'm managing my risk. I'm putting in there at 25 pips all the way to above those highs, and I'm managing it so it's a very small position in the grand scheme of things. Because the market shouldn't come back all the way up here. Oops. Shouldn't come all the way back up here to break this level up here. Even if we have a retracement, it shouldn't be all the way back up into, let me just say the way, shouldn't be all the way back up into here. Plus, I'm even higher than that. I'm somewhere up in here. Yeah, I'm going to take that. I'm going to have that, just leave that running in the background on a smaller position. Maybe I'm only going to risk like $1,000, which is, sorry, about $500. Or we'll see. We shall see. And then I will take smaller trades whilst that's running in the background, and I'll just focus on GU. I think that's what I'm going to go and do. All right. And the aim is to get down to here, but more importantly, leave it running. I'm going to leave it running over the weekend for it to keep pushing all the way outside of this level. And even if it kicks back to get back up to this pink line, I should still be safe with my stop up here. All right. So with that said, I'm done. It's done. All right. Now, it doesn't matter that on a smaller time frame we're kicking back in here because my stop's up here. And the entry for my stop was this closure on many time frames, 5 minute, 15 minute, whatever it may be, below this structure here. So this closure here was my entry on a much bigger picture. Why? Because the market I was going to say indicated. On this, not on the 15-minute time frame, sorry. On the 5-minute time frame here, is the fact that we, indicated, corrected, and continued of these kind of structures over here. Indicated, corrected, and continued, and closed down below. My stop's going to be all the way above here. Let me put my stop in, which I haven't done yet. No way. Let me put my stop in. and it's going way, way, way. It's going into space. It's in space, that position. Yeah. Now, this is my point. If I wanted to, and I saw this market start to do some strange behavior, like I didn't like the way the market came up here to this 50% level. It was looking too aggressive. There was some new news came out, some new stuff came. I can close out of this trade early. I don't have to take the full trade, full L. If this market came up here very, very quickly and started breaking, like, started going mad, like breaking above my range, which is strong rubbish, but you get my point. I could break it, I could close this early. I could say, you know what, close out early. So now I haven't even hit all of my risks. All right. If it continues to run in my favor, then great. I'll leave that running in the background. And my plan for that trade is that it gets down to this pink line and ultimately not to the yellow line, but to the structure in line with that yellow line, which is, if I go out to my hour, it's always about structure. Your lines that you draw on the screen is just lines. At least gets down to breaking some of these structures here, you know. I want to see it coming down to these type of levels, but obviously as this moves over time, this looks like maybe more the structure over in here. So all that 1 to 6, maybe I'm going to be happy if I see that trade just running over here, getting to a 1 to 3 calmly in its own time. All right. And my stop isn't even here. My stop is, it's quay. Let's go to Bitcoin real quick, and I'll just finish up with the Bitcoin talk. So we can see, let's go to actual present time of what's happening in Bitcoin. Go to our 1 hour. Let me reset this because it's doing madness. Here we go. So out of this level in here, we've seen the indication. This is our time frame. We've seen a potential correction. We don't know until that market closes above here. If that market closes above here, in my opinion, you could say you're going to take a trade like this. Aggressively would be below this last low, but this imbalance is a concern. All right. Safer would obviously below the imbalance and below here. But on an hour time frame, it might be the case that bid of the Bitcoin is trying to get bullish. And if he's trying to get bullish, what you're waiting for is you're waiting for it to break outside of this yellow. You're going to be taking the trade first and foremost up to that yellow range and protecting yourself up to the top of this yellow range. If I've drawn it correctly, which looks okay, doesn't look fabulous. Okay, like that. Up to this yellow range. At this point in time, you're going to be protecting yourself just in case, just in case the market goes up into this, goes up into this yellow line and this decided it wants to come all the way back down, which is very, very possible. Okay. But you're going to be hoping that you bust through that yellow line, this dashed yellow line here. Let me get rid of this. And then starts targeting some of these structures. All right. Or some of this structure. Yeah. These highs and beyond, on the basis that the market is going to be trading within this yellow range. I'm trying to push up to the top of that yellow range, which is not impossible. All right. But these are not all-time highs, but recent. Are they all-time highs? They are all-time highs. All right. So it getting up to here, these first blue lines are all-time highs. I can see Bitcoin doing it again. Why not? Bitcoin's like a different beast, isn't it? It's got other things going on. You've heard recently Joe Biden, what's his name? Trump is very bullish on Bitcoin. We know there's elections happening. We know other things are happening. So these are all factors that could make Bitcoin make new all-time highs. Why not? We saw it make an all-time high only recent. Yeah? So yeah. So that's where we're at with it. So that's my opinion on it, guys. On a smaller time frame, of course, we can get smaller in here. Yeah, we can get smaller in here. Look, so therefore this would have been the indication. This is the correction. It started continuing in here. If you was to draw some lines, have a look at where your continuation would have been. On a 15-minute time frame, your continuation, you're waiting for it to break structure. Can't really see too much structure here, apart from probably here. All right. Here is a bit of structure as well. If we drop down to a 5-minute time frame, have a look. The market came up here, made an indication, started correcting. Look, here's the structure between here and here, made an indication here, closure above, came back down here, dancing. hasn't closed above. Dancing, 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 hasn't closed above. Closed above. If you wanted to, that could have been your entry. Where's the Polish one? That could have been your entry here with your stop below these lows. Because I'm saying to you, all of this sideways action makes up just a low. Just a low coming into this level here. And then you've got this close above here. That could have been your entry. If that was your entry, you'd be in profits right now. Okay, and obviously we could get smaller and smaller and smaller again. Okay, if you wanted to, you could have waited to when this market came and it broke up above in here. That's an indication again above here. After the indication, we're waiting for the correction. You could be waiting for the correction and you could be trying to get your entry in. Have a look in here. You want to see it? I'll show it to you. All right, I'll show it to you. So you don't think this strategy is just some made up thing. Here it goes. From here, this would be the high. This would be me drawing my line like this. Why am I drawing my line like that? I'm drawing my line because I want to touch the last high in here. If you can't see it, let me zoom in. Somebody can't see it. This high, that wick there, before this lowest point. That's why I'm drawing my line in like this. Let me get rid of this thing here. All right. So this is part of the correction. So if I wanted to get in on a smaller time frame, I'm looking here and I'm waiting for an indication, correction, continuation above this high. Have a look at it. Indication, correction, continuation. If I wanted to, that would have been my entry. This would have been my aggressive stop below the last low. A safer stop would be below this low, and the safest stop would be below this swing low. But I'm an aggressive trader, more than likely, I'd be here. And if I did that, once again, I'd be in profits. You want me to show you a smaller entry? I'll show you a smaller entry. 1 minute time frame. On a 1 minute time frame, this market indicated, corrected in here. I'm still looking at this as some structure on a 1 minute time frame, this high. This is the low. I'm waiting for an indication above it. Correction, continuation. To be fair, I can't get that much of a better entry, possibly just about like this, a little bit better, just above this on this candle closure, closing above this level. All right, and my aggressive stop will be below here, so it's not that much better on a 1 minute time frame. Every time, guys, every time. That is a 1 minute and a 5 minute closure, which is great. It's coinciding in time. Yeah, it's coincided with other time frames. And here right now, if I wanted to, I could draw my lines in here and understand when it is I want to get out. Look here. To be fair, the way this is pushed on a 1 minute time frame, pushed here, 1 minute time frame, like right now the market is trading within here and here. This low and this high. Now, would you have the balls to sit in here and watch your profits go all the way back down here to this last low? I don't know. Maybe not. Okay. But that's what the market's trading within. So you could have just taken your money up here, your 1 to 5.6, tremendous trade. No reason to stay back in there. Also, if I drew in some lines in here, look. That line's looking like this. So especially when this market breaks outside of here, I might be like, rah, what's going on? Stress. Yeah. But that's your decision. Guys, good morning, good morning. Is there any questions? Is there any questions about what I've been busting up today? I've been busting up some trades.
What, did you record this?
I did record it, so this will be up there. I'm going to name it because I do have a problem that I don't name some of my videos and they just all say JP's meeting, which doesn't allow you to know what's what. So I'm going to name this one, and I'm going to name it Dancer. But remember the date, today's 17th, okay? I'm going to put something on in the in our live room. Hopefully, if you're not doing anything, you can play it in the background or you can sit here, watch it, play. Guys, I'm always here watching this stuff, just trying to learn something passively through osmosis, because I'm sure you're doing other things. You've got other things going on. Maybe you're supposed to be working or whatever it is, but I play it in the background to hear something. Sometimes I play books. In fact, I might play a book, which I told you guys was a great book for you to get into. Is there any people here that are interested in, business, setting up their own business, becoming a businessman, owning their own business? Is anyone interested in?
Yeah.
So if you are interested in owning your own business one day, and being your, this is an amazing book here. This is my library, guys, of my Audible. You can see I've got propaganda in here. Read People Like a Book, Dark Psychology and Manipulation, so that I can manipulate you into taking off your watch and giving it to me. $1 Million Weekend, which is what we're going to listen to. The Millionaire Fast Lane, I've got the Bitcoin Standard. I've got Outwitting the Devil. Maybe there's some here resonating with what you've got in there as well. I've got Technical Analysis of Stock Trends. I've got 10 Pillars of Wealth. I've got Happy Sexy Millionaire. I've got The Diary of a CEO. I've got The Psychology of Money. I've got Solve for Happy, Mo Gawdat. I've got One Good Trade. I've got Traffic Secrets. Keep going. I've got The Ultimate Sales Machine. I've got COVID-19 and Race. All right. I've got Magicians of the Gods. I've got Fingerprints of the Gods. I've got The Way of the Superior Man. Should I keep going? Is anybody interested in seeing what else I've got in there? Should I keep going?
Yeah.
Screenshots right now.
Oh,
Let me see a bare knowledge.
let me go to, I'll go to just 50 on there at once. So where was we? The Way of the Superior Man. Technical Analysis of the Financial Markets, all right, by John J. Murphy. I've got David Goggins' book, Can't Hurt Me, Master Your Mind, Defy the Odds. Accelerated Learning by Matt Bozonas, Effective Practical Guide on How to Easily Learn in Any Skill or Subject. I've got The Magic of Thinking Big by David Schwartz. I've got The Power of Positive Thinking, a practical guide to mastering the problems of everyday living. I've got Limitless by Jim Quick. I've got Atomic Habits. I've got The Unearthed Soul, The Journey Beyond Yourself. I've got Becoming Supernatural, How Common People Are Doing the Uncommon.
What have you read even a little bit of all of these? Yeah.
So what I do is this: they're audio books, right? So for me, it's like this. There's some of these that I've definitely listened to, but in that listening, maybe I've left and gone to a meeting or gone to the toilet and gone down and got a food. So I'm passively, you know what it is? It's like this as well. For me as well, I'm in my car. I've got a decent motor. I do like to, if I'm going anywhere, those who know me, I drive. I don't take public. Yeah. And you see, you spend quite a lot of time in your car, or maybe you spend a lot of time commuting, or maybe you spend a lot of time at home. And what we do sometimes is we get a bit caught up in listening to music. Now, look, music is fantastic. Music is for the soul. Music resonates at a certain frequency, makes you feel good, makes you remember certain things. But you've heard that song before, bro. You've heard it before. So when you're driving in your car, you're not learning anything new. So certain times you're in your car, you're commuting. It's an amazing time. Look, some of these books are an hour or so, 2 hours, or they're 8 hours. So that might be over a couple of days. You get to essentially not read the book, but listen to the book. And for me, when I'm listening to things, I just might hear one thing and go, oh shit, and have to rewind that shit like, oh yes, that one hit. You understand what I'm saying? Yeah. Especially if you've experienced certain things or you've going through certain things and the book resonates with you, you're going to be listening attentively, and certain things hit for me. So when you see me put up certain posts up on my WhatsApp, I'm a WhatsApp man. I'm not so much Instagram stories or not so much Snapchat. I'll put stuff up on my WhatsApp. Yeah. It's normally because I'll be listening to something and something just hit. Somebody said something. I was like, rah, did man really say that? Let me rewind that again. Yeah, hear that. Yeah, that was deep. Do you know what I'm saying? So they'll come from certain books. Yeah. So let me keep going. We've got New Market Wizards. I've got Hustle Harder, Hustle Smarter. That's 50 Cent's book. Got 0 to 1. I've got The Iceman. Yeah, this is the Wim Hof method. It's very interesting. I've got Eckhart Tolle, The Power of Now. Yeah, very, very good book. Got The Alchemists, The Science of Getting Rich. So in your answer to your question, I'd say, 60% of these I've listened to. Yeah. Some of them I haven't because I've been watching them somebody, or I've bumped into somebody, or I've seen someone reading the book, or someone's mentioned it in a podcast or something like that, and I've just been like, boom, boom, straight away I just go into my Audible and download it. I'm going on holiday, guys. I'm going to be away from the 24th for a week, so there may not be no Breakfast Club. All right, I'll be chiming in. I'm going to go away to a little island somewhere, just put my toes in the sun. Yeah.
Hey, when you back?
I'm going to be back on the 31st. I'm going to be back on the 31st or the 30th. Is there 31 days in the month? I never know. All right. But I'm going.
Yeah. All right, cool.
Yeah. So I'm going to be just having a little downtime, taking the whole family and that. So that should be nice. I'm going to, it's bad, isn't it? It's an island off of the coast of the UAE. Yeah. It's a Nuri Islands. One of them islands there. It's going to be some kind of island out there. But it should be nice. I've been to Dubai a lot of times. Dubai was actually my last. Go on.
Are you leaving your laptop at home as well?
This is what I'm saying. I'm probably gonna have to leave my laptop. I'm gonna get a telling off. So yeah, I'm gonna leave my laptop. But if you ever see my phone, my phone opens up like a laptop.
I don't know if your phone's gonna survive out there. It might be too hot.
Allow that, man. How to win friends and influence people. I've got the spirit of Kaizen, creating lasting excellence in small step at a time. Crushing It by Gary Vaynerchuk. The message of rediscovering the kingdom. I've got the complete conversations with God. Okay, guys. To be fair, there's some sick books in there. Like even me saying the names, I remember them. Like there's some very, very powerful books. The ones that stick out to me, guys. Complete Conversations with God sticks out to me definitely. Obviously, How to Win Friends and Influence People sticks out to me. The Science of Getting Rich, one of my favorite books. Not one of my favorites, but I like this book. It's a short one as well. This one, The Power of Now. Ooh. Sister, if you haven't read this book, you know you'll like this one.
Paper form.
Say it again.
I've got it.
Very, very good book.
Yeah, Power of Now. Power of Now is nice. Yeah. Trading in the Zone, obviously good. They're all good, you know. They're all good for what you want it for what you want to listen to. Even if they just say one thing to you, but after all of these one things, you've got your own little book of things that help you. Do you understand what I'm saying? The Way of the Superior Man. So yeah, I'm going to play today. I'm going to play this book here, which is $1 Million Weekend.
Can you send us the list of these books, please?
Oh, I knew somebody was going to say that to me. All right, so I will do. I'll do it. All right. So this is $1 Million Weekend. Now, why this book is really powerful, guys, is I'm going to tell you my own failings as a businessman. My own failings as a businessman is that because I've always worked for myself since I was about 18, you know, I'm kind of learning on the job. Now, what do I mean by that? I mean that if I went and worked for a big organization, ultimately you got inside knowledge. You can look at things from the inside and you can see how things are done. You could steal paperwork. You might even be able to steal clients. That's the reality. That's what happens. Yeah. And when I say steal, it might just be the case that they just like working with you and you've got relationships and you understand how things happen. But I've kind of did it the hard way. And with a lot of areas in business, I've learnt on the job. Okay. And this $1 Million Weekend essentially shows you how to become a millionaire in a weekend. Okay. And what he essentially touches on is how to take your ideas, test them very quickly, and, you know, understand whether or not it's an opportunity. And, you know, essentially you should be able to do, you know, how many weeks in the year? 52, 55, one of them. Yeah. You should be able to do that. 52, right? You must be able to do that many, businesses in 1 year to be able to test to become a millionaire. And to be fair, a lot of things he said from the perspective of being and experiencing certain things are definitely correct, and definitely a way in which you can shorten your learning curve and stop making business and ideas be such a mountain. A lot of people build it up as a mountain that they've got to do all these things, etc. And I like the way it's narrated. All right, so I'm going to play that. I'm going to play over some visuals so that you're just not looking at a plain screen. But I am going to play $1 Million Weekend, and you're lucky. I'm giving you guys an insight. Maybe I'm going to get in trouble for doing that. Let me just stop that live. Let me just stop the live to YouTube. Excuse my